Thank you very much to the Blockchain Association for having me today, and thank you all for being here. The Blockchain Association has been an influential voice in the policy discussions around innovation and support for a digital asset economy. Advances that, if done safely and soundly, will ensure the United States financial system continues to be the envy of the world. Today, I would like to share my thoughts on a key priority: reinvigorating the chartering of new banks. Chartering new banking institutions is one of the OCC's core functions. A robust pipeline of de novo banks is crucial to a healthy financial system. New charters ensure a diverse banking sector as new entrants bring new ideas, new products, and new services to U.S. consumers. De novo institutions are an important source of competition to market incumbents, which not only results in more consumer choice, but also incentivizes existing institutions to improve their products and services to remain dynamic market participants. Perhaps most importantly, de novo chartering helps ensure that the banking system continues to keep pace with the evolution of finance and supports our modern economy. That is why entities that engage in activities involving digital assets and other novel technologies should have a pathway to become federally supervised banks, if they so desire, and if they meet the requirements to receive an OCC charter. Over the past 15 years, de novo chartering has completely stagnated. In the late 1990s, the OCC received over 100 de novo charter applications each year, and nearly 50 per year in the early 2000s. But from 2011 through 2024, the OCC received, on average, less than 4 charter applications per year. Following the financial crisis, there were years when the OCC received only 1 or 2 charter applications, as well as years when the OCC did not receive a single de novo application. This shortage of applications was not due to lack of demand. Rather, regulators too often gave would-be organizers clear signals that applications for federal bank charters and federal deposit insurance were not welcome, would be indefinitely delayed, and would ultimately be denied if not withdrawn. The regulator's myopic decision to cut off the lifeblood of new charters into the financial system was not legally justifiable and contributed to a less dynamic and competitive banking industry. The OCC is now working to reverse this trend by once again embracing the role Congress gave us as the sole federal chartering agency. I'm encouraged by early signs that our efforts are having their desired effect. To date, in 2025, we have received 14 de novo charter applications, including from some entities engaged in novel or digital asset activities. That nearly equals the number of de novo applications that the OCC received over the last 4 years combined. The applications currently pending before the OCC include several for new national trust banks or banks that wish to convert to a national trust charter. This increase signals healthy competition, a commitment to innovation, and should be encouraging to all of us. Further, it is a return to the norm for the OCC and consistent with prior experience and practice. The OCC has chartered national trust banks since the 1970s, an authority which Congress expressly granted the agency in 1978. It currently supervises approximately 60 of them. Some banks and their trade associations have raised concerns about pending applications. Among other things, they have asserted that approval of these applications would be contrary to OCC precedent because it would permit national trust banks to engage in non-fiduciary custody activities. What they fail to acknowledge is that the OCC has permitted national trust banks to engage in non-fiduciary custody activity for decades. In fact, prohibiting national trust banks from engaging in non-fiduciary activities would not only threaten to undermine the dynamic and evolving nature of the federal banking system, but would also disrupt well over $1 trillion in traditional activities of existing national trust banks. Consistent with statute, national trust banks must limit their activities to the operations of a trust company and activities related thereto. Despite recent assertions to the contrary, non-fiduciary activities, notably custody and safekeeping, have been fully within the scope of the authorized activities of national trust banks since the OCC began chartering them. In fact, most national trust banks already engage in this activity, including uninsured national trust banks that are subsidiaries or affiliates of a full-service insured national bank or are affiliates of an insured state bank. In the third quarter of this year, national trust banks reported nearly $2 trillion in non-fiduciary custodial or safekeeping assets under administration, with these assets making up approximately 25% of their total assets under administration. Thus, concluding that non-fiduciary custody and safekeeping is impermissible for pending charter applications would also require reevaluation of the permissibility of this existing and well-established national trust bank activity, disrupting trillions of dollars of existing economic activity. Although the proposed activities of some new charter applicants, specifically those in the digital or fintech spaces, could be viewed as new activities for a national trust bank, custody and safekeeping services have been happening electronically for decades. For example, banks, including current national trust banks, routinely hold rights by electronic means to company shares in custody for their customers. There is simply no justification for considering digital assets differently. Additionally, it is important that we do not confine banks, including current national trust banks, to the technologies or businesses of the past. That's a recipe for irrelevance. Activities of national trust banks have evolved, as have activities of other banks across the country. State trust companies are also currently engaged in digital asset-related activity. For example, several states, including New York and South Dakota, have authorized their trust companies to provide digital asset-related services, including custody, to their customers. Certain existing banks and their trade associations have also raised concerns of potential unfairness, or that the OCC lacks the supervisory capacity to oversee new activities proposed by current applicants. Such concerns risk reversing innovations that would better serve bank customers and support local economies. As I've already noted, the OCC has supervised national trust bank activities for decades and ensured that fiduciary and non-fiduciary activities alike, representing trillions of dollars of assets under administration, have been conducted in a safe and sound manner and in accordance with applicable law. The OCC has also had years of experience supervising a crypto-native national trust bank, and the OCC is hearing from existing national banks on a near daily basis about their own initiatives for exciting and innovative products and services. All of this reinforces my confidence in the OCC's ability to effectively supervise new entrants as well as new activities of existing banks in a fair and even-handed manner. We welcome the initiatives of existing banking organizations, and we will ensure that new entrants and incumbents are treated fairly and held to the same high standard to the extent that their activities and risks are analogous. The federal banking system's capacity to evolve from the telegraph to the blockchain and to embrace new technology to deliver banking products and services to customers from rural counties to urban centers is one of its greatest strengths. Although Congress created national banks more than 160 years ago, they remain a fixture of the American financial system. This is not an accident. Rather, it is a direct outcome of the long-standing recognition by Congress and courts that banks can, and in fact, must adapt and develop new ways of conducting the very old business of banking. Preventing national banks, including national trust banks, from engaging in legally permissible activities simply because they are perceived to be new or different, due in large part to advances in technology and markets, would undercut this foundational premise. This risks stagnation and may have far-reaching effects for the banking system. The OCC will resist any efforts to erode its utility and diversity. For too long, regulators have stifled the formation of new banks, reduced competition, and weakened the resilience of the system. The OCC is committed to carefully reviewing each application in a timely manner based on individual merits consistent with applicable statutory and regulatory factors. We believe that innovation, competition, and fair access should always triumph over regulatory stagnation. As Comptroller of the currency, I am the steward of the federal banking system. I do not take that system for granted, and I will defend it consistent with President Lincoln's original vision, not for the benefit of any individual bank or parochial interest, but for the strength, competitiveness, and long-term growth of the American economy. Thank you very much.
I wonder if I could begin by asking you a little bit. I know you appeared before the House Financial Services Committee just last week and touched on this. You've really made modernization a priority. I think you touched on it a bit here as well. So supporting banks in embracing innovation, updating supervisory approaches to really align with today's financial landscape. So you're sort of 5 months in, you're looking at your progress so far. I'm wondering if you could tell our audience a little bit about which areas of modernization are having the greatest impact and where you see the additional opportunities ahead.
Okay. Again, let me just reiterate, thank you so much for inviting me here. I think I was here last year. I will not forget, I think, Congressman Tom Emmer's great speech. I was there for a dinner, I think, last year, same location. It was a great time. So obviously this group's done a lot, and its members are doing a lot to really kind of embrace innovation and drive into the financial services system. So, I would just say congratulations to all of you for all the great work you guys have been doing over the last year and beyond, and thank you for it. In terms of your question, so there's obviously a lot going on with the OCC. I take to heart the notion that we need to make every day count, or at least aspire to do so. There's a ton of work to be done. I got a great team, and I think we're making a lot of progress just in the time I've been there, which, as you know, is under 5 months. So one thing just to mention is, in the immediate past, over the last 4 years in particular, I think, the OCC is also, when presented with new technology or legally permissible activities, the OCC, I think, has too often defaulted to extreme skepticism around how those activities might be engaged in a safe and sound manner, and have oftentimes expressed just in general skepticism about the ability of anyone to engage in a safe and sound manner in a certainly legally permissible activity or a new technology. In contrast, I want to put more of the burden on the OCC itself to work with banks or others who are interested in engaging in a legally permissible activity or embracing a new technology to together find a path forward to do it in a safe and sound manner. That is to say, ultimately, I think it's just shared responsibility between the industry, and the OCC or other supervisor to find a path forward to do it. So that's something that's really important to me, and I think that's I think been resonating within the agency and beyond, hopefully. I would say just generally, another thing that I think has been resonating is my efforts to restore banks to their proper role as being central to financial intermediation. I think too often, not just over the last few years, but over the last 15 years, we have forced financial intermediation activities out of the banking system in an effort to de-risk the system. I think that's been wildly counterproductive because, of course, those risks, even if they're not in the banking system, go elsewhere. And I think as we're seeing again and again and again, banks are nevertheless exposed to those risks. So my general preference is that if those risks are going to exist within the financial services system, that banks have an ability to have visibility into them and have control and ability to actually mitigate some of those risks rather than taking kind of an ostrich approach to those risks within the larger financial services system.
Well, we've been talking a lot today about hello? Thanks. We've been talking a lot at this policy summit about the Genius Act, now signed into law by President Trump. And we're looking ahead now because the real impact is going to be shaped by regulators through the rulemaking process. So as agencies begin implementing Genius over the next several years, what steps do you think will be most important to ensure that the resulting rules provide clear, workable guardrails for the industry?
Thank you. So the OCC is obviously very excited with the remit of authority that Congress chose to give us. We're responsible for foreign issuers and federal qualified payment stablecoin issuers. And this actually kind of harkens back to the OCC's earlier days, back in the 19th century, when we were actually checking reserves, backing banknotes. So we have some experience with this, and we're confident in our ability to design a prudent regulatory and supervisory framework consistent with what Congress has given us. Sometimes agencies issue proposals, and they're more or less baked. They kind of know everything they want to do, and are really just looking for confirmation from the public and from commenters. I think in this case, we really welcome and need feedback from all of you and others, members of the public, to ensure that we're kind of making the right trade-offs Congress obviously did a great job in legislating here, but there are a lot of tricky issues that we're going to have to work through, and we're going to need a lot of input from folks to make sure we can make an informed decision. So I would note, kind of in terms of kind of keys to success. I mean, one is getting robust public comment from all of you. Two is recognizing this is going to be iterative. You all probably can better predict what the future will be 5 years from now or 10 years from now. I can't predict the future. I think we should all anticipate that we produce something now, we'll do our best, but the future may change, and so we may need to adapt the regulatory and supervisory framework as appropriate, again within the limits of what Congress said in statute. But I don't think we should ever think of a rule as being set in stone and unchangeable. Obviously markets adapt quickly, markets change, and our regulatory framework and supervisory framework needs to adapt too. So I think that's something to keep in mind, that this will probably be an iterative process.
I wanted to talk a little bit about I don't want to talk a little bit about. Sorry about this, folks. I wanted to talk a little bit about some review that OCC's been doing of large banks to determine whether they have been engaged in debanking activities. I know that the House Financial Services Committee has recently issued a report that confirmed that members of the digital asset community were denied access to banking simply because of their professional and political affiliations. And so how is the OCC ensuring that access to financial services is not restricted based on lawful First Amendment protected activity?
Thank you. I won't ask for a show of hands of who's actually been debanked in this room, but I suspect it's not a null set, just based on my own kind of anecdotal experience. So the OCC is kind of approaching this from kind of multiple different angles. So one of the things we're trying to do, so we've already done a bunch of stuff, and we're still kind of in the process of doing more. Some things take a little bit longer to do. So the things that we did initially off the bat were we created, through a couple of different means, a mechanism for registering publicly and with us, whether or not you feel that you've been debanked, right? So we basically made it part of our licensing process. So for example, if a bank's opening a new branch or they're engaged in a business combination, we will now take into account their record, or lack thereof, hopefully, of debanking. So we're creating a kind of public accountability mechanism where people have some way to register what they're experiencing. Because one of the things that's been challenging for us is just trying to quantify, to track, to scope the size and magnitude of the debanking that's been going on, not just obviously in the crypto space, but beyond, across a number of other lawful business activities, as well as on the political and religious side too. So again, I think it's important, both through the licensing process as well as the Community Reinvestment Act process, for us to create that mechanism and that kind of formal record of, okay, people can weigh in and raise their concerns about a particular institution's track record of banking or debanking. So that's one thing. We've also gotten rid of reputation risk even before I got to the agency. Use of reputation risk in guidance documents. We took care of that. The OCC and the FDIC are in the process, and I proposed a rule that would eliminate reputation risk from our regulations. Reputation risk, often being used as kind of pretext, or being the vehicle through which agencies like my own, registered their concern or distaste for certain activities and influence banks one way or the other that way. So again, we're trying to take us out of the equation too on that. Some of the longer term things that we have in process include carrying out the President's EO on debanking. So we're currently conducting a review of the 9 largest national banks, and looking through their prior policies around things like restricted access, for certain lawful business activities as customers, subjecting them to heightened due diligence, sometimes under the guise of BSA ML compliance concerns, sometimes under the guise of reputation risk, which is even more nebulous. So we're kind of looking at that, and we're still kind of midstream on that process. But I think we're making pretty good progress, and we're obviously very intent on kind of delivering and carrying out the president's EO with respect to those largest national banks. The other thing I would just note is we've also looked at our actions under Interpretive Letter 1179, which some of you may be familiar with. That's the one that created, through a guidance document, procedural impediments to banks engaging in digital asset activity, even merely custodying digital assets. That process was of, to say the least, dubious legality and unenforceable. Since it's a guidance document, you can't enforce a guidance document. But obviously we rescinded that pretty quickly before I got there. But what we did once I got there too is we looked through all the correspondence between us, the OCC, and banks, attempting to apply under that, again, extra legal procedural mechanism established by a guidance document. And we've disclosed all that correspondence so the public can see what was actually going on. We obviously redacted the names of individual banks to protect the banks, but we just exposed what was actually going on so everybody could see. I think a lot of people suspected what was going on, which is generally that people would come in, banks would come in and inquire and say, hey, we might be interested in doing this, and it would just sit and sit and sit, and then the bank a year later would withdraw its application. So I just think it's important to provide some transparency into what was actually going on. So that's, again, kind of how we've tried to address it, again, multiple kind of angles, and we're not done yet, obviously.
Well, you mentioned you're about 5 months in, and just as we wrap up, I know you mentioned making each day count, probably feeling like a sprint as you're getting going here. Any favorite moments or experiences you'd like to share so far as being comptroller?
So just briefly, it's been 20 years since a comptroller of the currency went on a bank exam. So I started going on bank exams. I've been on 2 already. Won't be the last. I'm trying to highlight the business model and geographic breadth of the National Bank Charter, as well as just to get out and see what's going on outside of DC, see what our banks are saying, see what our field examiners are actually seeing out there, so I can address any shortcomings, address impediments. Obviously one of the big problems that we all have working in DC is that we don't see what's really going on, and the banks are out there all over the country, not just in DC. And the vast majority of my colleagues are out there all over the country in 50 plus different field offices. So it's very important that I get there and see what's going on.
That's terrific, super important. Well, please everyone join me in thanking Comptroller Jonathan Gould. We'll be continuing to watch the OCC, and thanks a lot.